Hello, everybody, and welcome back to Fast CPAs and Consultants. As you already know, here we are with our CPA, Fulton Abraham Sanchez. Hello, Fulton, welcome back.
Hi, Monica. Thank you for having me.
Please. So for the new ones in our channel, this is a video series called Tax Talk, where we talk about the different tax strategies that you must follow according to your situation. How does it work? We receive your questions through our social networks or emails, and we design a topic to answer them and help you. Today, we are going to talk about the FIRPTA withholding tax. So Fulton, are we ready?
Yes, shoot me.
Here we go. The first question is, what is the FIRPTA withholding tax?
FIRPTA is a law passed by Congress, and it means Foreign Investment in Real Property Tax Act. So this is only dedicated for real estate. And it works only for real estate investors who are foreigners in the United States, meaning they are not US citizens or US residents. And it works like this. From the sale of the property, if the owner of that property is a foreigner, not US resident, not US citizen, that foreigner would be withheld 15% from the sales price of the property. The objective of this FIRPTA law is the prevention of not filing and paying of taxes when the sale of the property is executed. So in this case, FIRPTA requires that the buyer of the property withhold 15% from the sales price and send that money to the IRS. That is, in summary, the FIRPTA requirement for withhold. Is 15%, and the problem is that it's 15% over the sales price, not over the gain of the property. For example, if you sell the property for 100, and the property cost you 50, you will pay taxes over the gain, 50, and then that is a capital gain. If you hold it for over 1 year, you will pay between 10 and 15%. But that is 10 or 15% out of 50. Problem with FIRPTA is that if you are a non-US resident, non-US citizen, and you are a foreigner, and you hold real estate in the US and you sell it, the 15% is not going to be over the gain of the property, the gain for the sale. It's going to be for the entire price of the property. So imagine if you sell it for $1 million, $2 million, they're gonna withhold 15% over the sales price. And that's the problem with FIRPTA. That's why it's a big issue for real estate investors from other countries who come to the US to buy real estate.
I see. And so if that is the situation, how do you avoid FIRPTA?
There are two ways. If you want to apply for an exemption, you have to do it earlier than the closing. Probably, I would say 60 days, even better 90 days, because it takes time. And this exemption will allow you to be exempt from the 15%, but not from the tax. So the exemption will reduce the amount of withholding to the exact or to the close calculation for the tax over the gain of the property. So this, coming back to the example that we had before, you sell the property for 100, you purchase the property for 50, you have a $50 gain. Then the taxes will be over that gain with the exemption. If you apply, I would say 90 days to this exemption, because it takes time. It's actually one person, a revenue officer, reviewing the application, and he or she has to give you a letter. And with that letter, you go to the buyer, and the buyer will withhold only the amount that is on the letter, and that will be sent to the IRS. So you will be saving say large amount of money depending of the sales price. That's one way. So you can do it that way, but that will have to be in advance, like 30 days, not now, 60 days, 90 days, even better.
Okay.
The second way to do that is that the person who is buying the property will give you a certificate that he or she or they will live in the property as a residence for the next 2 years. And that letter has to be in writing. This applies only when let's say U.S. citizen or U.S. Resident will buy the property for living in the property. Given the primary residency, that will work. But that is not easy to find when you are selling an investment property. That it's very usual that another investor. So it's difficult. It's not that difficult, but it's difficult to find this, that you have an investment property, you are renting out the property, you are a foreign investor, and you find a U.S. resident or U.S. citizen who wants to buy that property for living in the property without renting. That will work. But if there is another U.S. citizen or U.S. resident who is also an investor and wants to buy the property for investment, it will not work. You have to go for the first option, that is applying for an exemption directly with the IRS. So one exemption is directly with the IRS. You have to apply at least 90 days. Another exception is with the buyer of the property, but this buyer has to give you a certificate that he or she will live in the property for the next 2 years, and he or she or they, the person who buys, the whole household, the couple, they must be U.S. citizens or U.S. residents to work.
Okay, got it. And who is subject to FIRPTA withholding? Only
every single foreign real estate investor who is buying property and renting it out in the USA. That's only for a real estate investor who comes to the US and they invest in the property for renting. In addition, even if you are a foreign citizen and you buy property in the real estate as a second home for vacation, FIRPTA still applies there. Even if you do not rent out the property, this is your vacation home, you come to time, the property still will be subject to FIRPTA, even if this is not rented out and you are a foreign citizen.
Okay, understood. And who determines if the seller has a tax obligation under FIRPTA?
The FIRPTA law itself. Here in the US, whenever you come to sell your property, there is something that is called the closing agent. The closing agent is the intermediary person or intermediary company that deals with the money that is about to receive from the buyer and the property from the seller. So that is like the intermediary for the operation. It's called the closing agent. So this closing agent is obligated under FIRPTA to withhold the 15% over the sale of the property, or if the seller of the property gets a FIRPTA exemption, with that letter, the closing agent, who many times is an attorney, would only withhold the tax that is on the letter. That is a reduced tax over the gain of the property, as we explained before. So who determines the tax obligation is the FIRPTA law, but who does the withholding, who is doing the withholding? Closing agent, who many times this closing agent is an attorney.
Okay, got it. And is FIRPTA withholding refundable?
Yes, it is, but you have to file taxes at the end of the year. That's the only way to get the refund from the withholding, from the tax FIRPTA withholding. You have to file your tax return. If you are a foreign citizen, you will have to apply for a ITIN number. An ITIN number is a tax ID, personal tax ID, individual tax identification number, ITIN, together with your tax application, with your tax return. And within the tax return, you have to report the original purchase. You have to provide the receipts. If you have made improvement, you have to provide the physical invoices to prove how much you purchased the property for, and also how much you have invested in the property. Once you have that, compared to the amount of the sale, you will determine the gain. And over that gain, you will calculate the taxes. And those taxes minus the withholding of the FIRPTA, that will be your refund. There are some problems. For example, if there are two parties or three parties who are selling the property, if there are three parties, then the IRS might tax you 3 times because you have to file 3 taxes. We have a case like that with a foreign client. We have to file 3 taxes actually, 3 different taxes, and they will charge 3 times the same tax.
Wow.
And then we have to do a second filing for claiming those overtax paid. So it's in addition to the FIRPTA, when you claim the refund, there is always the possibility that the IRS, not a possibility, there is a reality that the IRS is going to charge you 3 times the tax, because you have, whenever you file your taxes to claim the refund, you have to file for the full value of the property instead of filing for the value of the property divided into 3 or divided by the number of the people who are owning the property. So in this case, in the case that I'm telling you, it was 3 people, $1 million for the sale of the property. So it was like $333,000 each. But no, each one has to file tax calculation for $1 million. So just think about it. $3,000 gain is much lower than a tax for $1 million. So in addition of the overtaxation, in addition to the first tax return that we filed for the refund of the FIRPTA withholding, we got it. But then we have to do a second tax. We have to talk to the IRS. It was a long case. It took quite a few months, but each one of the owners got the refund. That's why this problem arises, because because many times the letter for the exemption of the withholding of the FIRPTA comes late, and there is a period. The attorney, the closing agent, cannot hold the money forever. If you don't have it in 30 days after the closing, they will send the money to the IRS regardless of what you say or who you are. 30 days, sometimes even less, lower number of days, they will send the money to the IRS. If you don't have your exemption, tough luck. You will have to file a tax return at the end of the year. The problem is that if there are multiple parties for the filing of that tax return for the same property, you will be taxed 3 times. And then it will come a second filing to claim that overtaxation and to prove the IRS that the 3 parties pay taxes not over the portion of the property that corresponds to each one, but actually over the full amount of the property. So that's a cumbersome problem.
Yeah, of course. That's clear in the way it can be now. Of course, in that situation, please everybody contact our CPA.
That's why I say you have to file the exemption at least 90 days.
90
so
days.
you have enough time when you go to the attorney for the closing.
Exactly. Thank you. And since we're running out of time, here we have our last question. Who is exempt from FIRPTA withholding?
Every single U.S. citizens and U.S. resident. They are not subject to FIRPTA withholding.
Okay, that is a good news for the citizens.
Right. You see, for foreign owners, even if they own the property with an LLC, either with one person LLC or multiple persons, foreign, all of them foreign multiple person LLC, even if they own the LLC, the property through an LLC, they still will be subject to FIRPTA.
Okay, that's clear. Thank you. Well, that's it. Thank you for joining us. And we try to put together all your questions about the FIRPTA, but we are going to make a second video, so keep tuned. And if you have further doubts, do not hesitate to contact us either in the comments of the video or by email. And also remember to follow us on our social networks, like in Facebook, where we have an exclusive group. You have the link in the description of this video as well. And of course, be sure to subscribe to our channel so you can be notified when we publish, as I said, the second part of this video, and of course, many other videos about taxes. Thank you, Fulton. Thank you, everybody, and see you in the next video.
Thank you
Bye-bye.
for watching us. Bye.